and it looks like we are all here, so we are ready to start. Hello, everyone. Welcome to our panel on tools for financial inclusion for emerging markets. We have a truly wonderful group of panelists here today. Just please allow me to introduce our moderator for today, Ian Sheridan. Ian is the co-founder and managing director of Estigo Ventures. He has more than 25 years of experience in business startups, turnaround, growth, and innovation. We are very, very happy to have him here with us today, and he will be leading our session. So with that, I give it over to Ian.
Thank you,
Thank you
Clary.
so much for.
Thank you. It's a pleasure to be with you this morning. Some weather in Cambridge for those of us local and for those of us around the world. Hopefully your weather is a little better than here in Boston today. We've got a great panel of folks and we're going to get right into it. My lens is 35 plus years in financial services, trying to democratize financial services. And we are now entering a time period, and you'll hear from these founders, where because of compute power, because of data fluidity, and essentially brilliant ideas that now can bring more people into financial systems, there's never been a better time to create an idea for financial inclusion. In my history, we were limited years ago based on the data, based on the compute power. We were unable to reach all markets in meaningful ways. And today, those barriers, I would argue, are limited. So let's get to know our founders and their missions. Maybe what we could do is start with Marlene, if you could share with us what your mission is and what your vision of the business is, and we'll go around the screen, so to speak.
Okay. Thank you, Ian. So my name is Marlene Garayzar, and I'm co-founder of Story. Story is a technology company offering financial services, and our mission is to provide financial inclusion to more than 100 million people in LATAM who have been neglected and turned away by traditional banking institutions. And we started this business 2 years ago, and we're very excited to, where we are now. We want to soon be one of the top credit card issuers in Mexico, and I'm excited to tell you more about us.
Excellent. Sebastian.
Hi, everyone. Nice meeting you. It's great to be here. I'm Sebastian Kanovich. I'm the local CEO. At the local, we do payments in emerging markets. We build infrastructure to connect global merchants with emerging market consumers. Today, we operate across 36 geographies in Africa, India, Southeast Asia, and Latin America. We are a public company in NASDAQ from June last year. And glad to be here and happy to be sharing the panel with everyone else. Thank you very much for having us.
Excellent. Tom?
Yeah, hi, everyone. I head up the insurance and wealth verticals at Grab Financial. Grab Financial is the financial services arm of Grab, which is the largest super app in Southeast Asia. Over the years, Grab has built up businesses across deliveries, mobility, business services, financial services across Southeast Asia. I think now across 430 odd cities in 8 countries. But as we've done this, we've realized that and we've seen that about 6 in 10 people in Southeast Asia don't have access, or either underbanked or unbanked. And so that really set us on the mission in Grab Financial to build out better financial services for these people. And then Grab Insure, on the insurance vertical, what we're really focused on is protecting millions of families in Southeast Asia with a very simple, fully digital, flexible insurance experience. So great to be with you today.
Brilliant. And somebody we didn't get a chance to meet before. Please correct me on the pronunciation of your name.
That's correct.
Okay.
So, hi everyone. Thanks for inviting me here. I'm Sambhav. I'm the co-founder of FamPay. At FamPay, we are building India's first neobank for teenagers. We started 2.5 years back, right out of university. And our mission is to build a neobank that focuses on making all our users financially literate and financially independent. And how we are doing it is we are heavily focused on just building a bank for Gen Z, or so to call. We are focused on building a bank for minors, because when when you tap them early on, when you catch them young, that's the time at which they are at a habit building age, and you can actually inculcate a lot of good habits in them. And it's a completely underserved market because all the products currently in India are being built for adults. So there are more than 40% of India's population today is below 18, and 40% of India is close to 480 million minors. So every year, millions of kids get their first smartphone, and they have no access to digital banking or banking in general. So that's the financial inclusion we are looking forward to, building the neobank uh, for the next 500 million miners in India.
Excellent. And you've all touched on it a little bit, but I would like to go a little bit deeper. You know, in the US 30 years ago, when defined pension plans went away, Americans were forced into saving and investing. And systems were designed really were only profitable at higher net worth individuals or high balances. We've since changed that with technology, but give us a perspective in each of your marketplaces on what is the current state of financial inclusion, and how are you changing that to bring more people into the system? Marlena, would you like to start with that question?
Sure. In our case, in Mexico, Mexico lacks in terms of financial inclusion. Only 30% of auto population has a saving accounts. Only 15% of auto population has a credit card, and only 42% of auto population have received or done a digital payment. So all these numbers are way below numbers in countries with similar levels of development. That's the current status. The way we're doing this, so we're building a digital bank in general. So right now, I have the license to grant loans and credits. We decided to focus on credit cards, but our plans is to offer a broader, the broader spectrum of products, savings. We have a lot of financial education across our platform, and we decided to first provide credit access, which is, as you see, the one of the lowest percentage in Latin America, and then we want to offer some other products like saving accounts. So that this is how we want to contribute to reduce the gap.
And if you could put a fine point, we had a conversation in advance of this meeting, and I asked what was some of the surprises that you learned, and you had shared with me that in regards to the clients you're serving, could you put a little color on that?
Regarding the risk?
The risk and their ability to pay.
Yeah, exactly. What we found out, because the thing is in Mexico, the lack of access is because most of these services are provided by banks. They're very conservative. They approve around 5% of applicants. So we are approving 5 times that. And what we found out is that people is really valuing access, and they are caring, paying on time. They do take care of this payment method we're offering them for many reasons. Number one is because they value that we are helping them build credit history. Most of our customers have nothing in their credit history, and we're offering a safer payment method for them, and they are taking care of it. They are paying on time. So this is something, yeah.
Excellent. Sebastian, same question to you. What is the current state of financial inclusion in your marketplace, and what needs to change?
So Ian, we are slightly different in the sense that we operate across multiple geographies, and we are not a payment method ourselves. So we are not going after end users. We are a pure infrastructure play. What we've seen is that whenever infrastructure is being built, there's inclusion, and we are seeing 2 things happening at the same time. On the one side, global companies are understanding that emerging markets are relevant. For many years, no one really cared. And when we spoke to US companies, they thought of Mexico or Europe as international expansion. Now they're generally thinking of the wider world. That's one thing, and I believe that's really powerful, because when Google or Amazon or Facebook want something to happen, they typically have the resources and the power to make it happen. On the other side, we see more and more innovation on the payment methods. There's more and more options for users in emerging markets to have a financial product, from credit cards to wallets to state-backed payment methods. And those are great news. The challenge there is fragmentation. Suddenly, for any global company to be able to accept, let's assume, hopefully, some of these companies become really, really relevant, and there are now 100 million people using a given wallet. That's not enough. That wallet needs to be used for commerce in order to fulfill the full potential for that. And that's a play we see. If anything, we are seeing more traction. The fact that fintech has become an interesting space from a funding perspective, which wasn't the case when we first started dLocal, I think will drive a lot of innovation. There's simply more money being attacking this problem, and some of that will need to have a transformational factor. And the other point is that traditional players like banks that have been the ones ruling this market forever, I think that for the first time understand that if they don't do something, there's going to be others doing something for them, and that's going to make a big difference in my view. I'm sure the banks in India are seeing what happened in Brazil with Nubank and are saying, okay, there's space for us to do something here. The same happens for banks in Mexico. So the idea of we are a bank and people need to come to us if they're good enough to deal with us, I think it's gonna be broken, and that's gonna be very powerful.
That's tremendous insight. Tom, how about you in your marketplace?
So we operate in Southeast Asia, and I think a general comment is that financial inclusion or penetration of financial services is low. And maybe if I sort of focus in on insurance, which has been what I've been working on primarily over the last 3 or 4 years, the penetration rate of insurance outside of Singapore and Southeast Asia, so in markets like Indonesia, Vietnam, for example, very large markets, but penetration would be in low single-digit percentages of insurance. So that's the sort of that's the environment we're operating in. And then I think in terms of what are we focused on and what are we seeing in the markets, I think there's a couple of things that I'd highlight. One real focus point for us is around product suitability or product design. So a lot of financial services products, for various reasons, are really designed for perhaps the top few % of the population in terms of income, and it's very hard for traditional players to design and deliver products to the broader market. And actually, that leads me to the second point, which is one of the key reasons for that is around payments. Credit card penetration in most of these markets is also very low, and it makes it very difficult to sell more traditional products that might be higher premium, for example. And so that's one thing Grab and Grab Financial is focused on from very early days is digital payments with the GrabPay wallet. And as you see digital payments start to expand in reach, that really starts to enable things like microinsurance. You can it's suddenly feasible to take a 10-cent premium or a 50-cent premium, whereas previously, if you're trying to do that over credit card rails, obviously it doesn't work. If you're trying to do that through cash, it's very impractical. So I think those are, that's the setting we operate in, and then some of the key dynamics around, the innovation and product design, and then payments as an enabler in the region.
Excellent, thank you. So Bob, your perspective, please. Oh, mute.
So yeah, so in India, definitely, I think there's a lot of scope for financial inclusion, and there are a lot of fintechs which are focusing on different markets like SMEs or MSMEs, and even different players like schools, or someone focusing on women, someone focusing on the rural crowd, right? There are a lot of areas where there's a lot of scope for financial inclusion. Why we picked up teenagers is because if you look at India, like as I already mentioned, that the population of teenagers is really huge from a demographic perspective. But also, if I talk from a consumer behavior perspective, India is culturally a very different country, right? So in India, like most of the parents or the older generations are not really literate or educated about the importance of knowing about finance or handling your own finance. And even a lot of parents or the older generations are handicapped when it comes to technology. So in India, kids actually act as the CTOs of the households. Whenever it comes to interacting with technology, parents go to their kids and they learn from them, like, how do we set up our DP on Facebook? How do we send a message? How do we order something online? Right? It's always the kids who end up teaching their parents on how to interact with these things. So it was surprising to know that, like, even after like parents always get all the household things to be done through the kid, but the kid does not have access to make these payments independently, right? They have to depend on their parents to borrow cash. They have to depend on their parents to like borrow their debit cards or credit cards. They can't get a credit below 18 years of age. So it was just crazy. Like, this is one of the most tech savvy audiences in India. They have been, since childhood, they've been interacting with products like Netflix, WhatsApp, YouTube. Their expectation from technology is huge, right? And they adapt to it much faster. And when it comes to banking, it's super traditional. You have to go to a branch. There is no product which allows you to open independent bank account for yourself. You have to take your parent along, and it's a long process, completely filled with filling out long forms. So we just figured out, okay, like, this is the future generation, and when it comes to banking, this is not the kind of experience they would like. So let's try to build a very focused bank for the next generation with the kind of experience they would like. How can we add social elements to it? How can we make it more gamified, more community driven? How can we add elements through which they can, because it's a young age, how can we educate them on the importance of investing, how to go about saving tax, and bunch of other things, right? Having the whole literacy aspect to it. So that's one. And secondly, India, again, from a behavior perspective, it's a country dominant by mobile payments. So in any shop that you go to in India, you'll find QR codes uh, on all the shops. And I'm not sure if you guys have heard about UPI. So there is one payment instrument that India has built, which is called Unified Payments Interface. Um, and UPI payments is simply mobile payments for bank to bank account transfers, considered as something similar to Venmo. But so when that technology got launched in 2017 in India, it was growing by 700% year on year. It was growing exponentially, and kids did not have access to it. So it's crazy that kids were completely missed out from this opportunity, and that is why we started with the payments product first. We tried to solve that problem of digital payments, and on top of this product, we're planning to build a complete ecosystem of other products, from savings bank account, credit, lending, investment, and all of that. So yeah.
Very powerful. I spent 35 years in fighting the battle of financial literacy, and to see that, this new entry point, that is world changing. The younger, the smarter people get early on, that is game changing for finance. Well, let's talk about technology enablement. All of you are fintech in some form, approaching markets. How is technology enabling your vision? Is it, and if you could describe your business, is it a platform? Is it software as a service? If we could do that. Sebastian, let's start with you, since you're right in the middle, an enabler. So talk about your technology.
Sure. So we are an API-based business. We are a pure B2B solution where global merchants can access these emerging market consumers for payments, payouts, issuing, all under one API. And for us, it's all building APIs has always been about building abstraction. All these markets are very different one from the other. So understanding UPI and Spain, Mexico, while there are many things in common, there's their own differences. So what we've thrived to do is always make sure that complexity is captured under one API. One thing we've seen is technology should be an enabler for global merchants. The lack of technology resources, it's common no matter the size of the business. So no one has enough engineers. So the more you can solve by standardizing and making it easier to navigate complex markets like the one we do, the better off you're going to do as a company. Having said that, I believe in fintech, the real innovation happens in the intersection between technology and the regulatory framework. If you only do technology in the space where we exist, you typically don't end up adding the most value. If you only do regulation, I think you end up being a legacy player. Typically, the sweet spot is somewhere in the middle, where you really understand the underlying trends on the ground and how the financial system works, but then you're able to build a great piece of technology on top of it. And that's what we aim to do.
Excellent. Marlena, how about you from a technology standpoint?
So we are a 100% cloud-based company. As I mentioned, we're a technology company offering financial services, and we do this. We have an application process that is 100% digital. We offer our product through an application that is available for Android and iOS smartphones. And then we have a 100% automated underwriting process. We make this decision in a matter of seconds, but what we haven't automated 100% yet is the KYC. We have for that we need to be integrated to the government. You know, we are working on that, but that's the idea, right? Because we want to for this customer experience to be fully automated and to get a decision of their application in seconds. So this is how we're doing it.
Is there perspective on how technology is creating a design and delight factor for the client and or improving the outcome, the overall outcome that would be different in traditional ways in which they would access credit?
Normally, yeah, they will need to go to a bank branch. There are not that many, especially in rural areas. So yeah, the experience is way different from what we have currently in the market. And we're trying to make it better. We're trying to make it easier for everyone to have access, no matter where they are in this country. And but yeah, there's a part of our struggle is just to getting access to those databases, just to do the KYC to. So we're working closer with the government. And I agree with Sebastian. In a way, not everything is just innovation and bringing technology, but also balance this with regulation. I mean, we are in a very high we're in a high regulated business, but we need to find some point in the middle, because in a way, what we are experiencing right now is as fintech is new. I know we have a new legal framework since 2019. But regulation, in a way, has been similar to what banks are expected to have, and but fintechs have cannot offer the same level of products. We cannot only offer wallets. We cannot receive money and use it to fund and to provide credits. Only wallets as a payment method, or P2P lending, right? So it's very limited. We need to balance that. It's part of the things we need to work on in Mexico.
Excellent. And Tom, from a technology standpoint, how are you optimizing the insurance experience for the client, for the end user?
Yeah, so the context for us is that Grab is a very widely used app already in Southeast Asia, sort of the equivalent to Uber, which some people might be familiar with. So it's very widely used in a number of day-to-day use cases. And then so for financial services and for insurance, the approach we've taken is a platform business model where we work, for example, with insurance partners on one side of our platform, and then we integrate insurance products through different entry points within our app. It might be in more of a marketplace type approach, or it might be embedded with some of the products and services we already offer on the app. So for example, a driver on the app could take out daily auto insurance and pay a daily premium rather than an annual premium. And so the way that technology enables that is actually we in the insurance vertical, we decided to do a joint venture with ZhongAn Technology, which is a Chinese insurtech company, to leverage their platform to help us build this out. So we obviously bring the distribution and a tech team to build, and to integrate in with that, but we leverage their specialist knowledge in building insurance tech. And that really sort of accelerated our progress to market. And I think through using their technology, ultimately what it's meant for customers is we've been able to deliver much more flexible products. So products where someone can pay a premium per trip. So a driver or a consumer or a user can pay premiums per trip, say 10 cents per trip. And you really need a pretty robust platform to be able to manage that. Because we do millions of policies. We've now issued hundreds of millions of policies through doing that. And you really need a robust tech to be able to operationally manage that with your insurance partners. So I think overall that's been our approach. We've partnered with some part of the more specialized tech, and really what it's been about is the ability to deliver more flexible and also I think simple insurance products.
Are there ways in which through your technology that you are improving retention of insurance products, or I'd say it this way, reminding the customer that they made a good decision to do business with you? So are you using the data in a way to create a repeatable, scalable process that allows you to grow with your client base?
Yeah, we have. Yeah, we've thought about the sort of customer life cycle, because I think with insurance, and especially traditional insurance, there's a lot of focus on getting to the sale, and then once that happens, then it's forgotten about, and that's a mistake. And even in our earlier days with some of our products, so we launched a very micro-critical illness insurance product in Indonesia, which in dollar terms might have been the maximum, say $1.50 per month in premium. But what we found, even when we got, really, we spent a lot of time creating what is quite a unique product, and it's more of a community style product as well. So the claims, or actually the actual in premium, is capped at about $1.50, but could actually be less if the claims are less than that. So we really sort of, and then we engage with the community around, what are the claims, not obviously individually specific, but what are some of the claims we're seeing to create more engagement and learning around the product and why it's beneficial. But even then, we found that we saw quite high churn early on with that product, because we just hadn't done a good enough job of explaining the benefits of having insurance. Insurance is one of those funny things. It's like probably one of the few products around that you buy that you probably really don't want to use. Like, you don't want to claim. And that in emerging markets as well, or certainly in the markets we operate in, is a tough concept. People want to feel like they're getting utility out of it. So really what we had to do is just build this sort of life cycle around continuing to explain the benefits of the product after you've sold it. And we're lucky to have such a sort of integrated part of or be an integrated part of people's lives, where we can communicate to them. We can do things like reminding them how to make claims, for example, or just reminding them that they've got the cover in the first place. Yeah. And so that's, and with that particular product as well, we saw in the data a pretty immediate response as well once we started to figure out that engagement model.
It's an exciting time for insurance if we can cross the threshold that insurance is today sold, not bought. And traditionally, insurance companies, I think you touched on it, the more they talk to their clients, the lower their retention was. So there's some issues there. Sambhav, you are empowering families through teenagers. There's a lot of data that's going on there. So how are you translating that into a scalable, repeatable process and reminding that customer, that end client, that they're smart doing business with you? No, mute.
So as a B2C company, definitely we have an app through which kids can directly download it, set up their account, and access their account through the app itself. So we have to directly work with a lot of banks for this, and because banks have a lot of traditional infrastructure, there have been other startups in the market who have integrated their technical systems with the banks, and now they provide their APIs directly to us in terms of integrating with the banks, just to make the process more smoothened up. So for most of our pieces, like the core KYC piece, the core transaction processing and all of that, we use a third party as our technical service provider. But how we probably look at security, how we probably look at technology is we leverage it to make systems as much as secure as possible. So the first intent for us is, because especially when we are catering to a minor segment, right, the risk that we are running is much more higher, because kids might not know who's trying to fraud them, who's trying to just do a fraudulent transaction with them. We have to educate them on what a PIN is, what kind of transactions are two-factor authenticated and all of that. So we have built a lot of checks on our product in terms of how many logins are happening through an account, what's their location, how to basically track a suspicious transaction and all of that. We keep innovating on that so that the experience is as secure as possible. So that is where we are trying to leverage technology the most. The second piece is definitely performance and CX, where we always try that if a consumer is doing a transaction, it happens in less than a second or in less than a couple of seconds. That is like the intent, and that is where we are constantly improving. But when it comes to data, that is like the most interesting part, because we have an audience, we have a target group whose data is unavailable to anyone in the market right now. So let's say if someone is ordering a food without FamPay, they are probably using their parents' card, right? So the transaction essentially gets booked under the parents' name. So no one knows like actually where the kids are spending, how much they are spending, what's the frequency of their transactions and all of that. And the lack of data is what even prohibits later on to issue the first credit card to a user, because you don't know how to calculate the risk, right? And there's no data. And because we are sitting in on top of all of that data, there are so many interesting insights that we see on how households are performing, what are the kind of transactions kids spend on, how many transactions are actually what parents want the kid to do and what they are doing on themselves. So yeah, we the whole gameplay is how can we make the experience much more personalized, and how can we unlock a lot of other opportunities for other parallel financial products by using this data, like probably a credit card, investment instrument, so on and so forth.
Excellent. And in addition to the questions that I have for you, the audience has been building up quite a bank of questions. So I'm going to change gears here. So these were not questions that you've seen in advance. So I know as founders you'll be on your toes. So Samba, one question for you. How do you ensure the kids spend responsibly on your platform? And are there legal challenges that you're facing in regards to that?
That's a very interesting question. So on the parent side of things, parents can build a lot of checks, like how much do I want my kid to spend on a monthly level. They can set a lot of limits, like weekly limits, daily limit, per transaction limit. And at our end, we also do a lot of gamification on the app. So just to give an example, just to build a good savings habit for the kids, we took inspiration from what are the other products that kids use, and kids use Snapchat a lot, right? And on Snapchat, there are features like Streak, where they're sending a photo to their friends every day just to maintain that streak. So we took inspiration from that behavior, and what we did was we built a savings product where you save in every 24 hours, and we maintain a streak for you. And if there's even a single day that you don't save that money, your streak is broken, right? And on every seventh day or every different milestones of that streak, we reward them into our own currency, which is the FAM coins, through which they can claim different rewards. And it was surprising to see that how many kids were actually able to build a good savings habit with that gamified feature. And we have kids who have been saving for more than 400 days with us straight every day.
That's
right?
great. The
So those are the
behavioral,
kinds of,
the behavioral economist community is loving you right now.
So yeah, those are the kind of things we actually do to actually help them take better financial decisions. And even there are a lot of things that we do to stop the impulsive buying and all of that. So yeah.
That's great. I know a few Nobel Prize laureates in behavioral finance who are applauding your findings right now. Sebastian, a question for you, and we'll open this to the panel, but I think to start, how can we boost adoption of digitally delivered products in geographies where the penetration of technology is challenged, where we're limited to internet access, as an example?
So we are seeing huge adoption. I think generally there's few, when you look at iPhone penetration or internet penetration in some of these markets versus any other financial service, they are way ahead. And I think consumption for digital goods has been picking up. When you look at what are the most relevant apps in any of these markets, you'll see that those are digital goods. And I think that's a trend that will happen, and it's kind of unstoppable. The question is how many good things can come out of that interaction, and that's a part where proper financial infrastructure, I think, plays an important role. But if you look at WhatsApp, I think it's probably the most used app in many of the countries we've been discussing, and that's not stopping anytime soon. The question is, can users can send money from one account to the other? Can they do commerce? Can they access ads? And that's a part that I think it's a little bit more challenged. So I'm very bullish on the ability of technology to reaching everyone. The question is, how can we make sure that the impact of that technology it's positive? And a big part of that is making sure that there's a healthy relationship with the financial side of it.
That's well stated. Tom, how about from your perspective in the markets that you serve?
Yeah, I think in the markets we're in, there's more phones than people, and there's a lot of people. So I think so people definitely, do increasingly have that access to digital financial services. But I think this question is still relevant in that one thing that we're seeing, and it's a trend that I think had started in China and is now emerging in other markets like Indonesia, where financial services being distributed through informal agent networks. So really getting into communities. So it might be a community leader or a business person in a community that is quite financially savvy and is able to sign up with an app and is able to talk to people within their community about certain financial products, like insurance products, for example, and they're able to sign those people up for insurance protection. And I think what you get there, what you're playing into, is a dynamic that already exists, where in Indonesia, almost culturally, communities would get together to protect each other if an individual had a misfortune. And so it's almost playing into that a little bit, where again, community leaders can encourage that, but it's enabled by digital tools. And it also reflects that even though some people might have access to a phone or a smartphone, in many cases it's sort of limited because they don't want to spend data or they don't have a lot of money for data. And so downloading a bunch of different apps is not realistic for them. And so even though it's kind of there, it's not really. And again, these almost sort of online to offline mechanisms that are building are important. They're also challenging, I think, as well, because they can cause issues in terms of like what is actually good for the customer. Are customers taking out the right financial products as well? And I think you've seen some regulatory response around that in China, and no doubt that will happen in other markets. So as with everything, it's a bit of a balancing act. But I definitely think that theme around online to offline financial services is something that we'll continue to see in emerging markets.
Brilliant. We're coming up to our time, but I've been told we can go a little over because of the late start. So and there's more questions than we can get to. So let me try to combine a couple of things. Marlena, from your perspective, what role does fintech have as it relates to educating clients and consumers? And is there any benefit in thinking through cultural norms and trying to make that education more consumable and more realized in execution?
I think that most of the things that of the products that fintechs are offering in Mexico are highly focused on educating the users how to better use their products. The thing is, in Mexico, what we have experienced from the banks is that information, terms and conditions are made so complicated, so no one is understanding what they are actually getting into. And what I've seen, and is the case of our company, is that we are trying to make everything more understandable, easier to. We're using even gamification, as Samba mentioned, because that's the way we should. I mean, most of our customers are young population, first credit card. It's important that they understand the product and they use the product on their benefit at the lowest cost, not to pay interest. So it's key. It's part of gaining their trust. The reason why many young people here they don't use banking services because they lack of the lack of trust and the lack of understanding and clarity on their services. Besides also the complexity, right? Because you need to go to the brand branch for most of those products. So it's key for what we are offering, and is part of what we are. It's part of the package. It's not only convenience service, but also easy to understand, and so they can use it for their benefit.
Excellent. Well, we've come up on our time, and before I hand it back to Clarice, I want to thank all of you for spending the day with us to talk about this. This is a very important topic. As an early stage investor in fintech, it's a pleasure every day to meet founders like yourself who are changing the world in very meaningful ways. And so thank you for your time this morning. And I encourage all of you, as you think about financial inclusion, we live in interesting times, at a time where if you think it and you can create it. Again, I think information is fluid, technology is evolving so quickly, and compute power enables us to take things that we could only dream about 10, 15 years ago and now can create. So I hope you've inspired the hundreds of people who have listened this morning to take the step to be a creative force in the world and change financial inclusion overall. Clarice, thank you for this morning.
Thank you so much, everyone, for having been here today. As Ian said, this is a very, very interesting topic, and your input is very, very valuable for us and for everybody who's participating. I encourage everybody to stay on Hublio and continue watching our next panel, which is very much related. It's payment revolution in emerging markets. Thank you again to all of the speakers and to Ian, and we hope to see you again very soon.
Cheers.